Let's just start with airlines, and then we want to move into defense, because you cover that really closely as well. It does feel like they're all finding their way back after the storm. We're trying to see if there's another storm. In terms of the impact, is it still a case of they're still trying to assess? How do you, as someone who covers some of these names, kind of factor that in?
Yeah, in terms of airlines, we're looking for revenue growth. We've seen the same trend across American that we saw at United and Delta. Corporate was up 12%. Corporate momentum continues. I'm taking a very long flight this weekend. And then main cabin weakness, but it's getting a little bit better. And it's all about cost control. That's why I think United went up the most on earnings, is they really beat out on costs when American Airlines margins came in 100 bips below our estimate. So I think the most polarizing stock is going to be Southwest. I'm really excited for their report on Thursday because they have some lofty targets. The stock's at $40 today. Some people think it's going to 30. Some people think it's going to 80. It's all about they're adding extra legroom seats, and is the strategy going to work?
But that's a huge shift for Southwest. I mean, they're essentially moving away from their DNA, what they're known for, and the culture that they're known for, and that's alienated some people already.
Yeah, it depends. So the average Southwest fare is about $109. So if you add an option for extra legroom or refundable or seating, if you add $50 to that cost of that airfare, so $159, that's a 50% increase almost. Does the passenger back away? I'm not sure. But then again, it's only $159. So how do we think about that? And what adoption do we assume? We're at about 5% adoption in 26. They have a bunch of other benefits as well, baggage fees and cost optimization. So that's driving their EPS to $3, essentially EBIT tripling off of a very low 25 base. So we'll see how much of that they get. You know, some people think they could get to $4 or even $5 as more of that extra legroom adoption comes in. But it's their first go at it, and we'll see how it takes off.
You have a $45 price target. So you're not at the 80 and you're not at the 30. So maybe a little bit higher from where we are?
You know, I would prefer United, where if you think about United, they're going to be accounting for 44% of the new premium seats through 2028. So they're going to be accounting for more than any other airline in the U.S. Americans after that, and Southwest because of their extra legroom. I prefer to bet on that corporate customer paying $1,000 plus $100 to achieve that additional corporate fare and that higher margin where United is adding its seats than Southwest adding on the, I think both are, given the multiples that they're currently trading at, United is more appealing to me.
Let's talk some defense, and then we'll talk some Boeing too.
Sure.
I want to look at shares of RTX. They're higher right now by about 3.4%. Profit topped Wall Street estimates, a sign of momentum that the company awaits a potentially huge jump in U.S. military spending. That's kind of where I want to start. What we've heard from President Trump in the last few weeks, not just with the idea of a $1.5 trillion defense package, but also calling on some of these companies to do a better job, pay their executives less, and also build stuff for the U.S. government more quickly. What are these CEOs to do?
There's a lot going on in defense, and that's why I was saying it's an exciting sector to cover, because this is the first time that the five primes might no longer exist as five primes by the end of the Trump administration, which is our view. We think that there's going to be, similar to what LHX announced 10 days ago, there's going to be more deconsolidation happening among the primes. Their budget is going up by $500 billion. From $1 trillion. We don't know the time period of that spending. We don't know how much will be added to actual equipment and R&D versus military operations, but they're seeing an increase, whether it's to fund defense tech names like Firefly, Voyager, the recent IPOs we've seen in the space, or the traditional primes, or suppliers like AeroVironment, Kratos are up 100% on the year already, and we're 27 days in. So it's really interesting to see what happens in defense, but there's a lot of shakeups that I think are going to play out. So it's about seeing who has the best positioned portfolio and who to play from here.
I was surprised, I know when you walked in, we started talking, and I mean, aerospace defense, just the S&P Broad Index, up about 9% year to date, up about 46% last year. Is it just because defense spending all around the globe is just happening and everybody's amping it up?
It's tremendous.
Is it as simple as that?
Tremendous
Or-
growth internationally, 20% plus. NATO budgets, Japan, Korea. We're seeing countries like Serbia put in orders that never used to put in billion-dollar orders for equipment to companies like Elbit in Israel. Coupled with the defense budget going from $1 trillion to $1.5 trillion makes defense very interesting. And the administration has been very supportive of defense tech, emerging technology companies that had stagnant revenues for the last decade are seeing 30, 40% growth.
But, as Tim mentioned, when the president talks about an industry, it can be good or bad. So is it good that they're on his radar? But when he's
Not when he says only pay the CEOs $5 million.
We're not talking about CEOs.
He did back off of he didn't quantify in the executive order the pay,
But he mentioned it in the social post earlier.
Yes.
Yeah.
It's a headline that caught our attention.
And $5 million, it sounds like a lot of money, but not for a CEO who's paid over $20 million.
Right. The executive pay, the average executive pay, I would assume in any sector is over 20 million. So the caliber of folks you would get into defense would be the opposite of what the administration's trying to achieve.
So what do you hear from defense companies about getting some attention like that from the president? Do they kind of brush it off a little bit? Like we're talking with them?
I think one interesting trend we've seen from the reports, whether it was Northrop or Raytheon today, is the lack of buybacks, because that's what the administration asked for, a focus on additional CapEx. Raytheon mentioned that, Northrop mentioned that, Boeing mentioned that. So across the board, everyone's like, sure, we're investing, we're going to get you supplies on time, that's our job, and it helps funnel the growth.
The Northrop CEO saying Northrop is balancing the need for performance with affordability and speed to market to meet the U.S. Defense Department's focus on speedy development.
Yes, and I think Kathy Warden, the CEO of Northrop, said this was the best spending environment she's ever seen in her career. So most of these executives are very bullish.
Do the upstarts in defense tech pose a threat to the incumbents? And I'm thinking of, an Anduril that is not yet, and I say not yet because obviously this company, I'm guessing, will IPO at some point soon. Do they compete with these incumbents?
Yes, clearly they're competing and they're collaborating. They're working together, both internationally and domestically. The primes are trying to work with, Northrop has a partnership with Kratos on CCA. It's a autonomous vehicle, essentially. So we're seeing a lot more collaboration, but they're also trying to take share. But the budget is growing overall, and that's the bottom line. Although we're not really seeing it in 26. Northrop's guidance is 5% growth. They talk about an acceleration from there in 27, 28. Same thing with Raytheon. It was modest growth in defense. It didn't really pop. But yes, it grew in the second half versus the first half, and we'll see how those trends continue.
I feel like with all of the geopolitical tensions and the wars that we've seen around the world, that everybody comes back to the U.S. military might and the defense companies here in the United States. What is the global picture? Where's the competition? Is there not much global competition, Sheila, when it comes to the U.S. defense companies?
So I think it's focused on maybe a few things. First is missiles and munitions, readiness. Like we need to have that available, and that's why we're seeing companies like Lockheed increase PAC-3 production from 600 missiles a year.
What's PAC-3 production?
It's a missile. PAC-3 is the name of the missile.
Got it.
Going from 600 units a year to 2,000. That is significant, to say the least. That's $8 billion of additional revenues to Lockheed over 7 years if they could ramp to those levels. The backlog's 20 years for a missile like that. We're seeing that across the board. LHX 10 days ago or 2 weeks ago now announced that they are seeing a government investment within their solid rocket motor business that powers missiles. They're going to open up 60 factories next year. LHX currently has 250 factories. So that's the magnitude of investment we're seeing from the government. So focus on missiles and munitions. And second, I think it goes back to old school warfare. Everybody thinks helicopters are over and F-35 is a bad program. But if we think about Venezuela, if we think about Iran, what's the kind of equipment we're using? So, it's not necessarily rebuilding an entire fleet for the Navy, but it's doing things that we could use pretty quickly.
Just in the last 90 seconds, I want to hit Boeing with you. Shares are down today by about 1.8%. The company did report this morning a second straight quarter of generating cash, 57% bump in sales during the final 3 months of the year. Shares down, though. Is it because of accounting charges for the KC-46 tanker program? Is that it?
No, everybody just assumes that's going to happen every quarter.
Okay.
So we're all good there.
Why are shares down after a quarter
so
that looks pretty good?
Shares opened down. The call at 10:30 got it up to it reversed about 4 points, and then they're down again. we're a believer in Boeing. Their free cash flow was a loss of $2 billion in 25. They're talking about positive $2 billion at the midpoint in 26. Normalized for one-time items, they're saying their free cash flow is high single digits, so say $8 billion. They're reaffirming their $10 billion target. And then they're saying they could go above that. So, 10, 15, it's giving long only as a reason not to dismiss the stock. If this company could actually earn $10 billion of free cash flow, then it's quite compelling at its current valuation. So we're seeing a lot of fluctuations. Are they talking back 27, 28? No, I think that you're going to see $2 billion in 26 and an improvement in 27 and 28.
So Boeing, let me just say, you've got a 290 price target. It's at 244. You feel good about that?
Yes.
Do you want to raise it?
We are supportive of Boeing. We think there's a few positive catalysts. I think President Trump might be headed to China in April. We'll see if Boeing heads there. We haven't seen a China order since, I can't even recall, maybe it was 2019, maybe earlier. So I think Boeing works from here, depressed prices for MAXes, maybe 50% below what they historically sell at today.